Good morning and welcome to 7 at 7, your daily news capsule to get you clued in for the day. It's Friday, the 18th of October, and I'm your host, Anirban Chaudhary. In the past few hours, two significant developments have emerged in global finance and corporate sectors. First, the European Central Bank cut interest rates by 3.25%, marking a shift in response to slowing inflation across the Eurozone. ECB President Christine Lagarde emphasized that this move brings the central bank closer to achieving its goal of stabilizing prices after an extended period of high inflation. Elsewhere, the International Monetary Fund issued a warning about the challenging global debt environment. IMF Managing Director Kristalina Georgieva highlighted concerns about government's reluctance to cut spending, which is exacerbating public finance problems amid slow global growth. These two events are set to have wide-reaching impacts on global markets, lending environments, and fiscal strategies in the coming months. China has unveiled new measures to address its ongoing property crisis, pledging to invest over $500 billion into unfinished residential projects. The government aims to support developers by increasing the loan quota for stalled projects, ensuring home buyers eventually receive their completed homes. Local governments will also repurchase unsold apartments to convert them into affordable housing. This initiative comes as previous attempts to stabilize the property sector have struggled, with home prices experiencing their steepest decline in nearly a decade, reflecting the deepening crisis in the real estate market. The move, however, disappointed industry analysts who said it wasn't enough. Coming homewards, India is introducing a voluntary group insolvency framework under its bankruptcy law, facilitating joint resolutions for stressed entities within a domestic corporate group. This will allow committees of creditors from bankrupt companies within the group to collaborate and accelerate the resolution process. Currently, the Insolvency and Bankruptcy Code lacks a mechanism for resolving interconnected group entities together, leading to delays in cases such as Videocon and Amtech. Amendments to IBC could be introduced during the winter session of Parliament. In the latest among the central bank's terse mandates, the Reserve Bank of India has banned 4 finance companies from issuing new loans, including Navi Finserv, led by Flipkart co-founder Sachin Bansal, and DMI Finance, backed by Mitsubishi UFG Financial Group. The RBI took this action after finding that these companies were charging excessive interest rates and applying unfair lending practices. This move follows a recent warning from RBI Governor Shaktikant Das, urging non-banking financial companies and microfinance firms to adopt sustainable business practices. The 2 other companies affected by the ban are Manappuram Finance's Ashirwad Microfinance and Kolkata-based Arohan Financial Services. It's tech earnings season, and 2 bellwether stocks announced theirs on Wednesday. Infosys and Wipro announced contrasting earnings for the July-September quarter. Infosys reported a 4.7% increase in net profit, bringing it to 6,506 crore, slightly below market expectations, while Wipro posted a stronger performance with a 6.3% sequential increase in net profit, reaching 3,227 crore. This was driven by better execution and improved margins. Wipro also saw notable traction in its banking, financial services, and insurance sectors. Now, the Indian Railways has announced a significant policy change, reducing the advance booking window for train tickets from 120 days to 60 days effective November 1. This move reverses a 2015 decision to extend the booking period to 120 days, which aimed to offer passengers more flexibility in planning long-term travel. However, the extended window led to high cancellation rates, with around 21% of tickets booked between 61 to 120 days in advance being cancelled. Moody's has estimated that India will need to invest around $385 billion to meet its 2030 target of 500 gigawatt renewable energy capacity. This includes adding about 310 gigawatts of new capacity, which will require $190 billion to $215 billion over the next 7 years. Additionally, another $150 billion to $170 billion will be needed for transmission and distribution infrastructure to support this renewable capacity. These investments are crucial for India's broader decarbonisation goals as it strives to reach net zero emissions by 2070. That's it for today. Keep listening and don't forget to grab a copy of The Economic Times for more news and analysis. This is your host Anirban Chaudhary signing off. Have a good weekend.